All right, we are back with Gareth Soloway, Chief Market Strategist at In the Money Stocks, and one of the favorite guests on my channel. Everybody loves Gareth. Even if you're saying price is going down to 20K, they still love you because of the way you say it. So Gareth, welcome.
Thank you so much. I appreciate you having me back. It's great to be here.
Yeah, man, good to see you. So let's get into it, man. I know we're going to talk about traditional markets, Bitcoin, and what specifically has happened here lately in the last week with Bitcoin kind of diverging from what it's been doing here the last, well, 6 months, I guess.
Yeah. Yeah. I mean, it's been a wild ride just the last week in Bitcoin. We've seen Bitcoin really surge to the upside. One of the big questions that a lot of people have asked me is, why has Bitcoin diverged from the stock market? We've seen the stock market be generally weaker. We've seen some downside, down 5, 6, 7% in the NASDAQ, and yet Bitcoin has actually gained quite a bit of strength. And the theory I have is this, is that you're starting to see stocks like AMC, GameStop, and these meme stocks really start to stall out and head lower. And my theory is that you're seeing a lot of money from average investors that were kind of riding these names. They're starting to pull it and go into the hot area, which happens to be Bitcoin. And that's propelling Bitcoin higher. So as you get more kind of negativity on the stock market, it's actually starting to benefit cryptocurrency in the near term.
What about liquidity coming out of the Chinese markets, Asian markets, and China stocks?
Yeah, I think that's probably a portion of it as well. You're seeing how the stock market in the US was the recipient of that for the last multiple months as the Hang Seng and the Shanghai have been coming in and the regulation has been there. The Evergrande situation has kind of been developing. But now that the stock market again is weaker, that money is starting to look for other areas. And it's really the hot hand, right? I mean, we're so used to this in this market environment over the last couple of years where, GameStop was the hot stock for days. And then it was AMC. Then it was, Palantir has been a hot one. And it's kind of chase the hot name. And right now, Bitcoin is the hot name. However, I will say this is that Bitcoin just hit a very important level to me. And if I can get screen sharing, I'd love to show this to you guys out there. So let's take a look here at the Bitcoin chart. And let me bring up my screen. And what you can see here is that this is that former trend line that I've come on with you, Greg, and I've talked on in other places about that scene of the crime neckline of the head and shoulder pattern. So you can see clearly, here's your pivot. Here's your little area right here. Here was your shoulder, head and shoulder before the 30,000 collapse. And notice how that line extends right out. Here you kissed it and had the big fall. And look at what you're doing today on Bitcoin. You're up into it. You just pierced it. Now you're starting to pull back a little bit. This is kind of what I'm zoning in on in terms of near-term resistance. So I'm not going to make any judgments for the next 24 hours. I want to see once the dust settles. Is this line, does price close above it? Do we continue up or do we see a pullback off of this level? The one thing I will say is that the bullish sentiment is at a feverish pitch right now. You'd almost get the sense that we're at the 65,000 level. We were, months ago when we hit that 65,000 with how bullish the sentiment is. And that does concern me. It does make me again, just say, listen, ignore emotion. What are the charts saying? And the charts are saying clearly, this is resistance. Now the chart needs to prove that it can get above. If it gets above, you have really a good amount of resistance, not until almost 60,000. Then a little bit of a level here at 62, and then really the 65,000 level would be your next spot. So again, this is the one you're watching. Watch that 54 to 55,000 range. Let's see where it is in the next couple days.
Yeah, that's interesting. So, do you use fib retracements at all?
I do. I absolutely do. I look at them as part of kind of the repertoire of various technical signals, but fibs are very, very important. Absolutely.
Yeah. So that is also, isn't that the 702?
Yep. Yeah, you're right on that. Absolutely.
Yeah, and so that's a big one there, getting through the 702, and then the next level, from there, to the 786, until Bitcoin or anything really gets through those levels, you're not really in the clear. But it's interesting that it's rejecting to that what you call scene of the crime and the 702 all at the same, that's the same level.
And in technical trading, you'll find that is if you learn enough about technicals, the best resistance and support lines are going to be where things match up. So you have one technical signal hitting at 10, $20, and then you'll find something else right around that same instance. And that's where you're going to have the most resistance.
Right. So, yeah, and you're right there. The sentiment out there, I mean, it's almost now the narrative is a given that we're going to hit 100,000. It's just a matter of when, not if. And it's almost assumed The next stop is 100 grand, almost nonstop with no pullbacks, no retracements, anything like that. So it's really interesting. So let's say that we are going to hit 100 grand by the end of the year. What does that path look like given your theory?
So for me, I still am hard pressed to believe that we would hit 100,000. And let me just be clear, because a lot of people are always asking. They always say, "Well, you've been saying 18 to 20,000 within 6 months or so that we'll get down there. Has anything changed?" And the answer is, until the chart tells me it changes, nothing has changed. And if you look at the previous cycles from 2013 and 2017, you had lots of chop like this after the all-time high in 2013 was put in at $1,250 approximately, and approximately 20,000 in 2017. There was that big move down, then a big move up, and lots of chop before you ultimately rolled over. So as far as I'm concerned, the 65,000 to me is the level, right? So that's the one thing that would differentiate this current price action from the past cycles, and would tell me, okay, if you're able to do that, then this has no relation to past cycles, which have been 4-year and change cycles, and you could easily get to that 100,000 level. So again, that's what I'm going to follow. Again, as a trader or an investor, if you're going to be successful in this game, you can't let emotion get out of control. I mean, you can't chase moves, you can't get fearful and freak out and sell. You have to say, okay, what's the chart saying here? And that'll give you the credence to do what you need to do. And right here, it's just telling that, okay, it's a great move up, but so far the thesis of a cycle top from 65K hasn't changed.
Yeah, it's interesting. And we're still kind of stuck. We punched through 55 a little bit, but it's kind of, holding that line right there. And like you said, we got to get closed above it. Let's take a look at the 2017. I don't really look at 2013 a whole lot because I don't think there was as much institutional involvement back then, and not a lot of large whales with the liquidity that they have now, just because simply the price wasn't where it is now, giving, large holders a lot more, liquidity to work with. So I know you've talked about this 2017. Where do you feel like on this chart, where we are today?
So that's a great question. And I think if you're comparing the price action, so we just took out that previous 53,000 high. So if you're looking at this, right, here's your 20,000 high. This would be your 65,000 that we hit months ago. You then had your drop to 30,000. This would be your 30,000 down here. You then had your pop to 60 to 53,000. That's probably what this is right in here. Then you had your dip off of that. And then if this is that same move up, this 17,000 high would be the equivalent of wherever this move is going, which should be shy of that 65,000. So again, we're trying to fit it into a perfect puzzle. Oftentimes charts are not perfect like that, but that would actually make sense why we're taking out that recent high here, which again, if we go back to Bitcoin, right? So this is that recent high that we made. Then we had the sell-off, and here we're making a higher high, but still not above that $65,000 level. So that would be my assumption if it is going to match the past cycles.
Yeah, interesting. And it looks to me like it could be, even maybe where that $5,000 bottom was and bounce up to that double top right there before the final capitulation.
It's very possible. Yeah. I mean, it's as a trader and a technical, guru, it's one of those things where you're always trying to figure this stuff out. It's like you have pieces, you have a 1,000-piece puzzle, and you're trying to fit the different things in. And when they fit perfectly, you're like, oh, okay. And then you have to fit another piece in, and you kind of have to continue to do that. And there's always the chance that you're going to be wrong, right? And that's just the probabilities of investing and trading. But the idea is you just want to get those odds in your favor. And then once, let's say, a 65,000 gets taken out, then you have to say, okay, well, now there's no chance of this fitting in any prior mold. And you have to go on the side that it could go higher at that point.
Yeah. Yeah. And, from a longevity standpoint, future of Bitcoin, obviously Bitcoin's not going anywhere. It's just going to continue to gain more adoption. So 100K is more likely in the future than not. The question is it this year? Is it next year? When is it? And irregardless, I guess, unless we get over that 55K and start moving up above 65, we won't know for sure. But once you clear 65, you're saying, well, then we probably definitely are on that path to maybe that 100K level and beyond.
Yeah, and if we clear 65, by no means would it, like, let's say we went straight to 65 here. For me, I would never be a buyer at that point, right? A lot of people are like, well, it appears 65, so Gareth says it's going straight to 100,000. As a trader, you would never chase something that goes from 40,000 to 65. what you would do is you'd look for a bull flag, you'd look for some sort of pullback, and then buy that pullback. Once you pierce that high, then the thesis of previous cycles goes out the window. Then you start looking for that consolidation, that setup to go long. You would never chase it up 5 or 10 candles higher on the weekly or the daily chart to chase price action. There's just too much danger there. And remember, as a trader, you always have to be analyzing risk reward, right? So you have to look at the setup, where it's come from. If it were to pull back, how much risk are you taking versus the upside? And that's really a constant question that you're asking yourself as an investor and trader.
Okay. So let's talk about the $20,000 level. Back when we were seeing those March lows, or when was it that we hit the bottom, 29? That was what, June, July, somewhere back in that May, June, July timeframe when we were bottoming out. It looked like if we hadn't had that sudden move up where we had just 10, 12, 14 days in a row of up, it was going to go below 28, 29 and head down to that 20 range. One, prior cycle high. Two, that's where basically after the 2019 bottom came in, 2020 bottom came in, it seemed like the start of the bull run was around that 18 to 20,000 level before the 65,000 top. So given the strength at 30,000, and take any market accidents out of the equation, like a pandemic or something like that, that's going to create just major market capitulation across the board, do you still think it will break below 30,000 since we couldn't really do it before?
I personally do. And again, all I have to do is just look back at those previous cycles. And after the initial dip from those highs, it still looks to me, I mean, if you look at every previous Bitcoin cycle, and again, this is assuming that that was a cycle high. And if we take out 65,000, then that obviously wasn't the cycle high, then whatever the future cycle high would be. But based on that, if you look at previous cycles, all the corrections are like 80% drawdowns on price. So, for this to only have been a 40%er, I think that's what it turns out to be, approximately from 65 down to 30. Or I'd be a little bit more than 50%. But for that to be the cycle low, I find it hard to believe. I still think, again, what bothers me, there's too many bulls. Like if you look at the 2017 top and when things bottomed out in 2018, 19, and 2020, there was a point where you were hard pressed to find bulls in Bitcoin. Like it wasn't like you could go on Twitter and everyone was going nuts and saying Bitcoin still is 100,000 this year in 2021. And you still have that. And that bothers me. There's something about a cycle bottom, whether you look at the stock market or at cryptocurrency, where when you truly have a cycle bottom, there's this kind of no talking by the hodlers. And then there's not a lot of people out there that are very bullish outwardly. You even saw it on CNBC, right? I still vividly remember when I started to accumulate Bitcoin back in 2020, it was because one of the reasons I loved it is CNBC took the ticker off their bottom of their website. They always had that Bitcoin ticker when it was trading in 2017, even into 2018. They finally got to the place where it was so unimportant and unpopular that they actually removed that ticker and they didn't talk about Bitcoin for a while. So, to me, it just doesn't strike me as being an actual cycle low. Again, I could be wrong, but that's just the nature of it.
Okay. Yeah. So, and for everybody watching, just to be clear, so your thesis right now is based on 65 as the market, this current market cycle top, we're going to have a lower low before we return to a bull market cycle and breach 65. That's your thesis right now.
That's correct. And again, if you look at those charts of 2013, that's what happened. 2017, that's what happened. If you look at the cycle in Bitcoin of years, right? In 2009, Bitcoin was launched. 2013, 4 years later, that was the high. 4 years later from 2013 is 2017. 4 years later is to 2021. Now we're still in 2021. So you could make the argument that if we do go up and take out 65,000, then wherever that tops could be the big cycle top. And then we could correct down at a later portion. I just find it hard to believe with the liquidity in the markets that we've seen, again, with the Fed pumping in and now they're starting to tighten, you're going to see tightening in liquidity. I even think the stock market is eventually going to affect crypto because you're seeing more volatility in the stock market. Eventually, brokers are going to raise their margin requirements, which is going to suck liquidity out of the stock market. Inevitably, it's going to come to affect cryptocurrency. So again, there's still that chance that we're still in 2021 for that 4-year cycle, but it's just hard to believe that with financial stuff tightening, that we still could be in a liquidity bubble that will make higher highs.
Yeah, it'll be interesting to see how it plays out. And obviously Bitcoin, just like traditional markets, we are in a macro bull market. It's been up
Yeah.
since inception. So is the Dow. So is pretty much every asset. Every asset out there has been in a bull market for the last 20 years.
Yep.
Um, with little corrections along the way.
And
And go ahead.
yeah, I was just going to say, and I always like to say this because, I don't like people that just tune in for a section, but I mean, please keep in mind that overall, I think crypto is the future, right? I mean, for all those people watching and saying, oh, Gareth's bearish. Well, yes, short term I am because I'm just looking at the cycles and I'm purely looking at the charts and what they're telling me. But the long term value of crypto is only going to grow. So if you have a 5 or 10 year horizon, whether or not we go back to 20 or whatever is probably inconsequential to where the upside could be in 5 or 10 years of 500,000 or wherever it could get, especially if it rivals the market cap of gold. I do believe it will be the future, the digital gold. The other thing I'd like to point out that why cryptocurrency does make me nervous for a bigger washout is that you still haven't had the .com washout in altcoins that you saw in the .com. So if you look at the big move in Amazon stock, right? So Amazon, I think, debuted in 1997 on the NASDAQ. You had this nice run in Amazon going into 2000. Then it put in a top and it flushed way down, right? And that basically knocked out 90%, if not 95% of all the .coms. There were hundreds, if not thousands of companies trading at that point that were .coms. Most of them run out of their parents' basement that had no revenues, but they still were given $100 million market caps, i.e. a lot of these altcoins. I mean, there's thousands of them at this point. So at what point, I mean, maybe if we make a higher high in the cycle, that's where it happens after that. But at some point, you have to wash out all this dead wood. And then I think you have 5 or 10 or 15 of these cryptocurrencies that really get adopted. And those are the ones that become Amazon. I mean, Amazon was trading at like $5 back in 97. And that's pre-split. I think it's split like 2 or 3 times since then. And now it's at $2,000, $3,000 a share. You could be looking at that type of upside in Bitcoin. You just have to kind of wash out that dead wood.
Yeah, it's interesting. And traditional markets, or not traditional, but the history of the crypto market, Bitcoin has led. And then when Bitcoin tops, usually, a few weeks after that, the altcoins go on their run and they top, and then the cycle's over. What's interesting this time is, and to your theory of 65 being the top, and that's been the quest that I've been on, is that our market cycle top right now? A lot of the altcoins have been ripping to all-time highs, not at scale like before where everything went up and you could throw $1 into anything and you're going to make money. It's been, certain coins here and there that have been ripping to all-time highs. Other ones haven't run yet. So what's interesting, and will be interesting to watch is that after this recent Bitcoin move, if it cools off a little bit, what the altcoins do. They should be set to run after this a little bit. So, we'll see. I think it looks like it's setting up a little differently than what we would traditionally see in the crypto markets.
Yeah. What's also interesting is that you have lower highs right now also being put in on Ether, and Ether had this monstrous run, right? I mean, it was just an incredible run. Never got back to the all-time highs though, and now it's pulled back. And even on this Bitcoin surge, you're not seeing Ether participate quite as much in terms of percentages. So I'm not sure what to make of that yet, but it is something I'm kind of keeping my eye on because I do think Ether is going to be a big competitor to Bitcoin in the future, maybe even overtaking in terms of market cap down the line. But same thing again, NFTs to me, yes, I think there's a place in the future for them. I think things are a little out of whack with how much certain NFTs are going for on the open market. And again, that's just a sign to me of some sort of bubble. But to your point, is 65,000 the top of that bubble, or is it a later portion this year that we're going to see?
Yeah. And it's very different too than before. So this time around, you have the NFT space, you have gaming, you have the other altcoins that weren't there last time competing with Ethereum and things like that. There are questions about Ethereum, what's going on, what the future looks like, because it hasn't been able to get past its all-time high yet. And it has more competitors out there competing for that space. And Ethereum's had its problems. So it'll be interesting to see how that all plays out. But yeah, the NFT space, the gaming space, and a lot of these other projects that are real companies with real revenues are competing for the capital that was primarily going into Bitcoin and Ethereum in prior cycles.
Yeah.
Yeah, so really interesting. So any final thoughts on traditional markets and what to look for there? Are we looking at, your typical 15, 20 in this day and age, 20% could be considered a correction? Or do you feel like we're looking at, more of a sustainable downside on traditional markets here for a while?
Yeah. So, I mean, for me, the stock market made a big turn just in the last couple of weeks. And I'll show my chart here, folks. So basically there was a short that I sent out as a heads up. I even did some interviews talking about this, but we basically topped out on the NASDAQ 100 right up here. See this trend line on the upslope. And again, this is just purely charting action, right? So if you go back, look at how far back this trend line goes. You can start this one and it's a perfect parallel line. So when we hit 2 days ago, or I guess it was last Friday, when we hit the low end of that, I went out and said, listen, this is a buy. I actually covered a bunch of my shorts in this market because you should anticipate. If you look at history, right? History is what charts show us, is that you got bounces every time you hit this line, you got big bounces. So the Qs should have some sort of bounce here, but now we have started to make lower highs and lower lows. So if we go to the S&P 500, this was a big change in trend where all the way since March of 2020, you were making higher lows and higher highs until a couple weeks ago. Here was a high, lower high. A low, lower low. Here was a high right up here and a lower high. So what that tells me is that the trend in the S&P has now shifted to the downside. So for me, what this tells me is that in general, I want to start shorting pops more aggressively and really just looking for quick bounces. If I do buy stocks, I'm not looking to stick around. I'm really getting in and getting out. And I think yesterday's price action into today is a great representative of that, where you had this great bounce yesterday, and then today it's almost annihilated 100%. So you got to just kind of change your mindset in the stock market right now that things could continue lower. I think we're going to go down in the short term to the S&P 500 200 moving average. You should see some good action there, maybe a good sustainable bounce. But until we start making some significant higher highs and higher lows again, I got to be in the bearish camp now on the S&P and the NASDAQ.
So would you be, after, let's say through the end of the year, we continue that trend looking for a big bounce back, or do you think, potentially, we're looking at some sort of a 6-month potential, downward trend?
Yeah. I mean, I'd be in the case, and this again it goes back to anytime you're looking to make a top call. If we go back to previous cycles, if you go back, for instance, to 2007 into 2008, I think we made our high in 2008. It then took us all the way into March 2009. So, I mean, you could be looking at 12 to 16 months of downside. Obviously, big bounces along the way, but general downside before this market can start turning the corner again. And again, the beauty of it is this is a swing traders market now. The bounces are going to be big. The drops are going to be big. So again, it's a kind of a nimble traders market. For me, that's my bread and butter, where I can get in and get out very quickly on these trades. But again, for someone who's a longer term investor sitting on the sidelines, it's probably not a bad idea.
Yeah. Interesting times. We'll see how the rest of the year shakes out. And, Gareth, I appreciate you taking some time out today, and I look forward to catching up with you again soon.
It's always a pleasure. Thank you so much for having me.